Hey all, today I'm going to tell you how I'm investing during the crisis and how I think you should as well. I'm going to be covering a number of topics such as real estate investing, which is my personal favourite and what I teach here on the channel, investing in stocks, investing in commodities and currencies, general savings, and also mindset of investing during this time. So let's get into the video. First up is property investing. In the UK, the housing market is currently paused as estate agents aren't allowed to book any new viewings due to the government's social distancing rules. In addition, banks and lenders aren't releasing funds for new mortgage applications. However, if you have a purchase that's in progress and has exchanged or is close to exchanging and is just yet to complete, banks are making exceptions on a case-by-case basis and still releasing the mortgage funds to make sure that too many sales don't fall through. I think this is a really proactive approach by the banks and the lenders because it's going to help ensure that not too many people are losing out on any kind of deposits or legal fees or inspections that they've paid at the moment. If you're currently midway through a purchase and you're a bit unsure of what to do, I'd probably take a step back and look at the actual property that you're purchasing or the deal that you're getting. If you're getting a good deal and you know that this property is say 20 to 30% less than what the property could be worth after refurbishment, I'd potentially still go ahead with the deal because I don't really see the crisis being like a long-term Great Depression style recession. I see it as more of a short-term hiccup in the market that when the coronavirus or when the virus and crisis goes away, the market will pick up and continue almost where it left off in January, February time. And so why do I think this? Well, a recession is determined as 2 straight quarters of negative growth or shrinkage, and obviously 2 quarters is going to be 6 months. But if we look towards China, who have been on lockdown for 2 months and have just finished their lockdown and allowed people to go back to work. So in China, business is kind of going back to as usual after only 2 months. So obviously if in the UK, we can kind of mirror that 2 month or say 3-4 months, just in case we're not quite as advanced or quite as good as China at controlling the spread of the crisis. We can obviously go back to business as normal, and then we're more likely to see kind of 1 quarter of negative growth instead of the full 2 quarters or a much more extended period of recession. Obviously, I do believe that some businesses might fail as a result of the lockdown because obviously if they don't have the cash reserves to continue meeting their expenditure, they're obviously not going to do too well and they're going to become insolvent because obviously cash is king. But I think a lot of businesses will have had their expenditure cut, as obviously if their employees aren't working, they're not paying wages because the government's paying 80% of salaries. They're potentially not paying rents or mortgage payments as well because obviously the banks will have given them a 3-month holiday per se. So I suppose their expenditure will also be frozen, as obviously to account for the lack of revenue or the frozen revenue. Obviously, I think the businesses that will fail are going to be a small proportion of the entire businesses in the UK. For example, I think there might only be a handful of businesses out of the FTSE 100 or FTSE 250 that do fail, which obviously makes up a large portion of our economy. So to kind of sum everything up with property, obviously you can't do any new property transactions at the moment, but if you're currently in a property transaction and it's a good deal, I would definitely continue with the property transaction. Alternatively, if it's your dream home, then I would still obviously continue with the property transaction because it's likely that you're going to live in this home for say 5 or 10 years, and it's likely that in 5 or 10 years the value of the property is most likely going to be worth more than it is at the moment, and you'll obviously have a much better 5 to 10 years in terms of quality of life living in your ideal home, and also still be able to make some money at the end of it in the most likely circumstance. Next up is how I'm going to be investing in stocks. My number 1 tip for myself is going to be to use more patience than I have in the past and also stick to companies that are kind of tried and true. Companies that have been around for say 50 years and have experienced a recession or two are more likely to have good cash reserves so they can go through a period of negative growth or shrinkage. So I'm going to be taking a more longer term approach to investing, and I'm going to be investing obviously in these tried and true companies such as Boeing or BP or Coca-Cola or Carnival, just companies that have been around for a long time and have significant cash reserves, because obviously if they do have good cash reserves they'll be able to recover quicker and will experience less of a hit financially as a result of a slowdown. I think at the moment day trading is very difficult because of the amount of volatility that's in the market, and not just normal volatility, it's more of like an unknown volatility. As an example, obviously the US stock market reacted positively to I think 3.2 million job losses. So the reason why it reacted positively is because the market had priced itself to expect more than 3.2 million job losses. So obviously when this figure came in lower than expected, the market reacted positively. But obviously from someone external looking in, it seems very unusual that a market would increase if there's millions of job losses. Therefore, it's quite unexpected how the market is reacting at the moment, and it's also reacting very volatilely, going up and down, say 5% today and 5% tomorrow. So it's very difficult to day trade at the moment, in my opinion. In terms of investing, I'll be using platforms like eToro or TD Ameritrade or Webull. Especially the first two platforms have been around for a number of years. I think eToro has been around for 4 or 5, maybe 6 years, and obviously TD Ameritrade has been around for a long time and is a listed entity on the New York Stock Exchange. So obviously these companies are going to be reliable, good pricing, very easy to use platforms, and they also have mobile apps as well, so you can invest on the go. If you've enjoyed the video so far, please leave a comment below letting me know your favourite form of investing. Alternatively, if you've got any questions that you want me to answer, drop them down below as well and I'll be sure to let you know the answer. Next up is commodities and currencies, or currency pairs. These are great to invest in during a crisis and potential downturn because they don't often mirror what the stock market and property markets are doing at the time. Commodities, for example gold, silver and aluminium, tend to stay relatively flat in value during a downturn or recession, crisis, however you want to phrase it. But obviously because the value of the pound or the value of the dollar is weakening, you eventually need to use more pounds to buy the same amount of gold. Therefore, effectively, your gold kind of increases in value compared to obviously the pound or dollar. Also, we have currency pairs, and obviously these aren't a currency on its own respect. They're a currency compared to a different currency. For example, GBP USD or GBP EUR. So obviously these currencies move at different rates depending on how the individual country or continent is faring. So for example, if the US is being hit very badly by a recession, the value of the dollar against the pound might fall. But obviously if the entire world is experiencing a similar depression or downturn, the value of the currency pairs will stay in line with each other as they move. So it's definitely kind of worth spreading your risk per se. For example, if you're someone that only likes to invest in stocks, maybe consider picking up some commodities as well, just because if all of your stocks fall, at least the value of the commodities will stay fairly flat. Next up is savings, and I'm actually going to try and invest slightly less in real estate and the stock market for the moment and focus on increasing my savings, because obviously at the moment cash is going to be king, and obviously if I can't work for any reason or another, I'm going to need more cash to obviously pay my expenditure for the next few months. It's also probably worth dividing up your savings account into multiple different accounts at different banks, because obviously if one bank is experiencing a difficulty, you have the risk of losing the money that you have saved in that bank. Obviously in the UK, there's insurances that protect you for up to 75,000 in one bank account, but obviously if you have more than that in that one bank account, it might be worth splitting it into accounts at different banks. In terms of saving during this crisis as well, I'm going to try and avoid spending money on unnecessary things just to make me a bit more happy and focus on the longer term, that obviously if I can save some money over the next few months and a good amount of money, it's then going to give me more money in the future to invest into real estate and stocks. So obviously at the moment I'm just going to effectively focus on not spending too much as well. Next up is kind of general mindset during a crisis as well. So obviously we've spoken about saving more and spending less, but we can also consider trying to earn more as well. This might be a great time to pick up a part-time job. Obviously there's a lot of companies such as Tesco's or Asda or Sainsbury's who are desperately trying to hire more people. So obviously if you found yourself without work or reduced hours, you could always try and pick up some more hours working at a supermarket. You know, it's a great way to earn some money. Or alternatively, working at a delivery company. Obviously there's only a few that are still open, such as Domino's, but obviously this is then kind of nighttime work as well, so you can be working during the day at a supermarket and during the evening at a delivery company as well, just to earn some more money that you can obviously use to invest or save and kind of get you through this crisis. As well, in terms of mindset, I think at the moment it's important to be patient. In a rising market, you can almost just kind of grab any deal that comes your way because you're going to make money on it. But obviously in a crisis or a downturn, you need to focus on only finding the best deals, the highest quality deals, because obviously if the deal doesn't go as well as you thought it might do, you need to try and insulate as much as you can against any kind of risk or loss of any sort. Therefore, in terms of properties, I'm only going to be looking at properties with, say, a 30 or 40% profit potential, obviously when the housing market unfreezes. And in terms of stocks, I'm only going to focus on companies that have been going for a long time, say 50 years, and have very good cash reserves, and are therefore likely to see through the crisis without too much of a financial hit. If you want to learn more about property investing, or alternatively investing of any sort, feel free to watch some more of my videos or subscribe and ding the notification bell so that you'll be alerted when I upload a new video. Cheers!